Most investors want to buy low and sell high. However, they often do the opposite. When I first started trading and investing over 15 years ago, I often wondered how it was possible that there were so many experts in the field of finance, but the majority of them had no clue where the market was going. The masses always said what the masses wanted to hear, not how I was actually going to make money. In today's video, I want to share with you how you can see through that, just like we talked about in the previous videos as well. So make sure you are subscribed, hit that like button, and follow us on Twitter, link in the video description. Nearly hitting 80,000, but more importantly, if you're here in Bali, I'm going to do a quick meetup with other friends, Crypto Tips, somewhere in Bali next week. So follow us on Twitter and I'll post about that then. The main thing I want to get into today is, of course, BTC and these repeating patterns that happen time and time again, and the masses keep missing them over and over again. The reason for this is they want to hear the worst, but what the markets keep doing is going up. They always just want to keep hearing the markets are going to go down, but unfortunately, the mass of the time, the markets go up. So in this video, I want to show you the accumulation areas of Bitcoin, the new all-time high areas of Bitcoin, and how this accumulation zone that we're currently seeing for BTC is quickly coming to an end. And by that stage, when it does come to an end, you have to hold on for dear life because it shoots straight up. When you look at it on a chart, once that is over, this market just rockets, and everyone is hoping and praying that they have got on early enough before the market turns and dumps them out. These are the safest times. Let's have a look at that in further detail in this video. So Bitcoin, first up, I want to have a look at these accumulation and distribution areas for BTC against the NASDAQ. So what we can see here on the NASDAQ is previous periods of accumulation. You can see that right down here. This is when Bitcoin was accumulating, and this was the time when Bitcoin was running through new all-time highs. All it is just looking at the dates down below here. So 2017, Bitcoin was running straight up. NASDAQ was also doing the same thing. It went on a little further, but like you can see here, that was the bear market for Bitcoin. This stage, the NASDAQ basically went nowhere. It traded between 6,000 and about 8,000 points, quickly went on for a little run, pandemic, and then off to new mega tops. And each time this has happened, Bitcoin only had a small window, a small period of time where it's hitting new all-time highs, when the masses jump in, when we get to those new prices, $70,000, $80,000 BTC, that's when the masses get excited, they all jump in at the same time, and there's that few months left. And so you can see it here on the NASDAQ as well, 2015 through to 2017, that was basically that accumulation area. So you can go back to BTC, you can look here in 2015, there is your end of 2016. At that point, basically testing new all-time highs, market runs on for another few months, game over from that point. That's it, game's done. You can go back and you can see that right here on the chart. Even though the NASDAQ was going up, that period there for Bitcoin, 2018 into late 2020, that was all basically sideways chop. Sure, there was some pretty good runs, 300%, but it came all the way back down. And that just washes out the weak hands that don't think the market is ready to go all the way to new all-time highs. They think it's going to collapse past the previous cycle lows, which is exactly what is happening right now. A lot of people still think the market is going to collapse past 15K, and even more think it's going to go below $20,000. But we're just in the stage that what we've seen in the past. We've seen this happen in 2015 and 2016. So these are those areas. Look at that accumulation that is happening right now on Bitcoin. So this is that same time frame. That's the June low. There is your November low. And now we're all the way up here in July. Whereas the NASDAQ, it's basically put in its two lows here, June and October, and then shot away from that point. There's accumulation. Look what happened last time, December 2018. Then you had the March 2020, which doesn't look like anything on the chart now compared to what we saw in 2022. And the market ran away from that point during Bitcoin's accumulation. So the same thing is happening right here. The other time that it didn't necessarily run away was back in 2015, 2016. So we still had a bit of an accumulation here for the NASDAQ, but remember, it was coming up to a new all-time high itself, which is probably why it didn't run away. This was the dot-com bubble that held the NASDAQ down, but was still an accumulation period for BTC, going back, I believe it was into those zones there in 2015, 2016. Then got those new all-time highs for the NASDAQ. Same deal happened for Bitcoin. Show was over just a few short months later. Let's not fall into that trap because we are coming to the end of this. And the end typically has shown up to be about 2 years for that entire period. So 2 years, then the breakouts, probably about that 6 to 12 months of those all-time high prices, markets going crazy, then the rollover, show's over. And things typically repeat no matter what the fundamentals are. The same comments come up during a period and then those comments disappear. Right now the comments are, there's not enough liquidity in the market. How are we going to get more money into this? I think things are going to be muted because there's not enough money, which are all logical, but we're talking about trading markets here. And sometimes things aren't as logical in the now as what they might be in 6 months' time. When you look back in 6 months, because the markets are always forward looking, then you think, oh, why didn't I see that then? Why was I so hooked on what people were saying now about insert fundamental news or fundamental data? In this case, the money supply. In this case, liquidity, quantitative tightening, you name it, insert it now, because in 6 months' time, you'll look back and think, why was I so hooked on that? And why did I miss the opportunities that are coming up in the markets? Stick with this. Think about that. Look at the timing on it. You've got 2 years. Next accumulation, 2 years. Yes, the NASDAQ is up here, but during that period, Bitcoin was in a trading range underneath the old all-time high. 22 bars as well on a monthly chart here, which is basically 2 years. Look at where we currently sit. Now measuring it from the June low here, because these have been two significant lows for both markets, June and October, and of course for Bitcoin, June and November. If we go to this current month, we're at 13, which means we only have about 9 months left in this accumulation phase for Bitcoin, if we use the June low, that is. All right, so we go all the way out to about 22 months. That takes us into April of 2022. But if we do it from the lows, approximately that October period, we're at about 9 months now, which means maybe we have until about August of 2022. So there's a bit of a window in the middle of next year where we could start to see prices hit or test, get close to those previous all-time highs on BTC. So we don't have that long left. And by that stage, a lot of the masses are back. They're thinking things are safe and they like to buy in when they're safe. That's not how investing works. If you're going to make money, you need to get in when things are unsafe, but you've done your due diligence, you've learned. That's how you minimize the risk and you're able to enter the markets. That applies to everything. Everything that I've learned, if it's in real estate, if it's in stock markets, if it's in business, once you've been able to identify the risk and reduce the risk based on your assessment, your education, and how you can best perform in that market, then you're going to make more of the profits. It's those that wait until all the risk is out that lose the most. They wait and wait and wait, and they wait until it's safe, and they basically don't make any money. That's how the game works over and over again. So that's where we currently sit. The same thing for the S&P 500 here. You can see the accumulation zones. I've just repeated the same areas here, looking at the accumulation of where BTC was in relation to the S&P. You can see there are long areas of accumulation, long areas of accumulation, and we're currently in that zone now. In this case, I've measured it from the October low as well. Bear markets are relatively short, and bull markets are relatively short as well. These are the longest periods, and this period is coming to an end probably sometime in mid-2024. That range, again, between that April and August period. Guys, I want to remind you, link in the top of the video description is for our free trading guides and investor reports right there, tiacrypto.com/subscribe. And that gives you some information about our TIA Premium as well, the membership there. And if you want to understand a little more from our current members, link here is for the free Discord community, which you can get access to and check out all of the reviews, all of the trading results that are coming through as well from the members over here. And in terms of the reviews, plenty of great stuff that you can read about what they're finding in regards to the courses, the support, the live streams, everything there is. Go and check that out as well. All right. Now, the last thing I want to have a look at when it comes to these cycles repeating. This last one we saw here, these things happen once every 4 or so years. The last time we saw this thing happen for Bitcoin in terms of the volume, which I'm going to look at now, is roughly around this period here of 2020, 2015, 2016. And I'm just looking at the macro breakouts here. So why the market is not going to collapse past significant low points like 15K, the cycle low, 15.5K, or March, which was about 19.5K. Many are still looking at that. And eventually when we break over $32,000, this low that was set back in June of 24,750, that low won't be broken either. This happens time and time again. Once these signals are triggered to the upside, it clears out the downside. That's how you can improve your risk on a trade, and we won't get those lows broken. So you can feel a little more assured if markets are going to be going further higher than hitting that low point. So what I've pointed out here on this particular chart is looking at the volume as the market breaks out. So you can see the accumulation zones, and then as the market breaks past that accumulation zone, the volume starts to increase. That's what I pointed to here. And then we sit back on top of that accumulation zone. It happens time and time again. Reaccumulation, the breakout, the test, the reaccumulation, the breakout. And you can see in the next couple of breakouts as well, when we go into 2017, that's as the market races off to that new all-time high. So the market had broken out to a new all-time high somewhere around January or February of 2017, and the patterns continue to repeat into that top. So as we see the volume increase and the breakout and then the reaccumulation, it takes some time while it's still underneath the old all-time highs, because there's still the possibility that we get some sort of quick, swift move to the downside like we saw in 2020 with the pandemic. But of course, the prices closed up really, really high, which showed that extra strength. But that is where the uncertainty lies. That's why the masses aren't in it. And you talk to them about Bitcoin or crypto, they'll say, forget about it, remind me later. I've had those same conversations with people here in Bali, actually, where they've said, I don't want to know about it. I lost a lot of money in FTX. I'm not into it at the moment. And they're just going to wait until the top comes back. It's the same thing time and time again. So yeah, basically looking at the breakouts here, there's your next one here, higher than the last few months. That was your accumulation, a breakout. The market does not come back under those levels. Sure, in this case, it was a black swan. It came, tested it, and closed really, really high. We've covered that many, many times before, why that is not likely to happen again, because it's a black swan. If you're waiting on a black swan every cycle, good luck to you. It's probably not going to happen. But anyway, moving forward, we had a ton of volume through this low period here from June into, even you can go all the way through to January, where the market broke above and closed back above those highs. So that is your volume coming back into the game on your breakout, on your bottoms, and on your capitulation bottoms as well. So this is all happening over and over again. You got the bottom right here again, higher low forming, increased volume in the previous month, but lower volume again, which is absolutely fine, especially after such a massive accumulation. And of course, we've heard many of the warnings that the whales aren't buying and the volume is low, but in fact, it is not low. The volume has been huge through the previous part of the market, and now the prices are higher. That is telling us that there isn't as much liquidity on the market anymore. It's telling us that the Bitcoin has been bought, taken off, and it's doing its own thing. Regardless of what all the on-chain analytics are trying to tell us, this is saying what people are actually doing. The on-chain analytics can change at the drop of a dime. They can move Bitcoin from wallets to exchanges, backwards and forwards, very, very quickly. But in the case of buying and selling, they actually have to physically make that purchase. And if you're holding large sums of Bitcoin to make those sorts of transactions, then you're going to be paying fees. Then you could be losing money in slippage, so that you might not get that entry and exit price, and you might not get filled at the exact prices that you want, but you might not get to be able to re-enter into those positions if you wanted to fool the market as well. So you've got to be playing the game pretty strategically, especially if you want to try and spook the market with actual buying and selling in terms of the volume. But in terms of on-chain analytics, using that to tell us, oh, I'm going to transfer some Bitcoin to an exchange or to a wallet, that doesn't really affect anything. Some people can get scared short term, but it doesn't really, well, it's not going to affect the price or the volume that shows up on these exchanges. That's the key to explaining what these charts are made up of and what actual smart money is doing in the markets, because we can read what is going on here. We're basically reading a new language, and that's all I hope to do in these videos, is explain or try to teach how to read the language of the chart. So looking at those accumulation areas, it seems like we have less than 12 months to go. Maybe at the best case scenarios, we'll have somewhere around that 12 months to go in the case of the accumulation for BTC before it tests and breaks to new all-time highs, which of course brings on the masses and the retail and the media, and it's basically all too late at that point to make any significant gains. The same thing has happened on the NASDAQ, the same thing has happened on the S&P. These were the lows. We've been calling it while the masses of economists, media, everyone else has been saying, no, the markets have to collapse further, and there's money supply issues, and there's still Fed issues. They'll tell you every other issue that there is out there, except for what is actually going on. And that's what I've learned over the last 15 plus years of being in the markets. Most don't understand, which makes sense, because most don't make money in the markets, and it has to be that way in order for the few to continue making money. But you don't have to be on the side of the masses. You can be on the side of the few. It's up to the masses to change how they view the markets. It's up to the masses to change. There's no secrets in the information. They're just getting fed the same shit that they want to hear over and over again. And when you stay in the markets long enough, you'll see that that is basically the pattern. They don't want to listen to an alternative view at those lows. And it is hard to find those alternative views at the lows, I'll be honest with you, because the most people just want to hear the same shit over and over again. And that's what gets clicks, that's what gets views, telling people the market is going to go down. Meanwhile, in history, the markets continue to go up. Like Peter Lynch says, one of my favorite quotes, far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. And it's taken me a few times to see it happen in the markets over and over again, to understand this in so much detail. It's not just the tops and the bottoms, you know, everyone's trying to anticipate it. It's even deeper than that when you start to dive into it. In the corrections themselves, so people losing money at those bottoms. People are actually losing money by waiting for the market to go up, by waiting for there to be safer opportunities, rather than get out there, do the hard work, and understand how to read a chart. You want to understand more? Hit that like and subscribe. Check us out, TIA Premium memberships over there. And if you want to see what the community members have to say about it, link in the video description for our free Discord community where you can check out many of these reviews from our members. Thanks once again, guys. Have a great weekend. Don't forget to subscribe to my Twitter where I'll let you know about a meetup that we're doing in Bali next week. Otherwise, have a fantastic weekend. I'll catch you at the next one. Peace out.